Hello, hello, hello. All right. So we're live. This is Volatility 75 live trading. Yeah. All right. So just like I indicated yesterday, I hope my sound is properly connected. Sound check. I'm trying to be sure that my sound is properly connected, All right. So are you ready to roll? Okay, so this is Volatility 75. We're on the 1 hour time frame. As I've already told you, my take on Volatility 75 as of last week, that we are on the surge higher, and it's clear and evident that we all see Okay. Are we ready to roll? Okay, so pardon us, the sound team is checking on something in the background for me. All right, so let's go to Hi everyone. So we are looking at volatility 75 currently on the 1 hour trading. Just yesterday, if you watched my live video, I actually posted out there that we were going to see price going to continue higher, but then we were likely going to reverse to fully rebalance a fair value gap, and then beautifully the price did what we actually anticipated that it was going to do. Okay, this remainder fair value gap here was fully rebalanced, and I could see how price dug into that twice before it continued surging higher. Now what has price done? Beautifully, you could see that there was an area of consolidation right in here. Okay, so price did a little bit of accumulation right in here, and then right after the accumulation, what did price do? Price went below the accumulation and swept the sell side liquidity resting below it, as well as it went further and rebalanced fully the remainder of this fair value gap on the 1 hour time frame that I just indicated with this green shaded area. Okay, and then price had ultimately traded above the consolidation. Now, interestingly, what we usually want to expect after this happens is we probably want to see price retrace a little bit into 50% of the consolidation, which is inside this. We can have our 50% being where we have already placed the trade. Okay, so the 50% of this swing, the swing that goes above the consolidation and below it, we have 50% being where we already have a trade running. Okay, so beautiful. That is what we usually want to expect. That, and why is price, why are we expecting price to trade into 50% of this level? Usually when it happens, so we want to see that price has necessarily traded into a discount price level. Okay, so when we take a swing, a swing can be subcategorized or divided into two, where we have price actually trading above also. For instance, price has swung from this side to this low. When we divide it into two, when we divide a swing into two, the upper portion is regarded as premium prices and the lower 50% portion is regarded as discount prices. So if price trades below the 50% level, then we are in discount prices. And when price is in discount levels, we rather want to seek for more premium prices. Okay. So that is where we normally expect price to trace back to that level. And the reason why it goes down to that level on the second note is that more of buy orders reside in the lower 50% of the discount levels. Okay. And anytime we go down to a smaller time frame, like a 5-minute time frame, when we look at this swing, okay, when we look at this swing in question, we could see how if we are looking for likely area where price can trade into, when we consider this swing, is basically where we have imbalances, we have relative equal lows, okay, which sometimes if it is below or it falls within the discount level, it makes the price or it makes the market even more effective. Okay, so at this point, where can we necessarily identify in a 5-minute time frame to say that, okay, well, price can go deeper into these levels? We can clearly identify a few on the chart, but all those areas are areas that price can still likely go there. Okay, it can even go into the 75% level. So for instance, if you watch this chart, where is the 75% level indicator? This is on this blue line, right? Okay, yeah, below this blue line, right? So this is the 75 level. Okay, let me put on the 75 level for you to see right in here. Good. Now let's go to the 5-minute time frame. Right at the 55%, below the 55% level, can you see the relative equal lows hanging in there? Okay, so it is still a beautiful area that price can still dig into. Okay, but it is not necessarily always the case that price should come all the way this far because of this liquidity hanging in here, low fruit target hanging in here. Price may necessarily not come all the way into this level, but then when price should take the 50% level, that is where our eye is usually drawn to. Okay, this 50% level, this is where our eyes is usually drawn to. Anything that price does below this, around this area, we would want to probably engage the market, and just at the top of the 50% level is the breaker on the 4-hour time frame. That, so let's go to the 4-hour time frame. There was a breaker in here that price traded into. Okay, and then we saw the reversal away from the breaker. Price has traded outside of the breaker. Okay, outside of the breaker. And what are we expecting now? On the 1-hour time frame, we don't have any fair value gap residing around this side. Okay, so now should price trade back to the breaker and then we see a reversal away, then automatically we have that telltale sign. Well, look at the 15 minutes time frame. We don't really have any form of fair value gap around. After price exited the breaker, we don't have any form of fair value gap and all that. So we want to wait for price to come back into the 50% level, and then when it exits and leaves any traces of fair value gap, it becomes a point of entry. Okay, as beautiful as that. Yeah. So we are still looking at the market and then what it's doing. Okay, So beautiful, that's what price is doing. So let's just keep our eyes stuck on the chart and see what market does, and then we'll take it from there. Okay. So I want to leave you here. I'm going to take my time and fully record a more detailed video analyzing and giving you detailed explanations of the week. Okay, but generally this is what we are anticipating ahead of the week. Okay, or let's say ahead of today's trading. Okay, generally this is a day trading, and this is what I'm anticipating. Okay, so we keep our fingers crossed right from in here, and we want to see what price does. Okay, this fair value gap that price just created is a very good fair value gap, you know, that we can trade off on, but then I'd want to rather wait, okay, patiently, and see, and I want to see another good opportunity rather than this. Okay, I rather want to expect price to come down to back into the breaker. Okay, yeah. Oh, interesting. So, just like I said, you see, that fair value gap is really a good area and a point of call. I think I would have to take the time and wait patiently. Although, right after we came out of this breaker, this has been the fair value gap, or should I say first fair value gap created for the bullish order block, but on a 15 minutes time frame. But then when you look at the 1 hour time frame, I mean, it's also a good telltale sign of the hook for a good entry. But then I prefer to still hang in. I rather believe in going more harder when price is at a discount price for a bullish run. Okay, yeah. So I think generally in trading, you know, patience is one of the key components and ingredients for a very good and a successful trader. Your ability to patiently wait sometimes reduces the risk of you having to deal with the emotions of having to have a wide stop loss areas, you know. So I'd rather always let the trade run if the entry point is quite for instance, if I'm looking for a buy trade, okay, I'd rather not be in a hurry to buy at a premium price. Okay, so for instance, where we are currently, we are still in a premium price, looking at the swing. Okay, and it will not be more expedient of me to buy at that level, because then it gives me a very wide range of stop loss. Okay, then my stop loss becomes too wide, and then this is leverage. Okay, you should understand that on the market we leverage. Okay, we don't have all the capital to be juggling with on the market, and the market is really not your friend, and it can mess you up. Okay, so when you have the opportunity to actually hold on to a trade, I suggest that you actually take your time with the market. Okay, you actually take your time with the market. just like I said, I wasn't really interested in that area. Okay, and beautifully you can see how price is still just gyrating back towards the breaker. Okay, and coupled with the fact that it's still coming back into 50% of the swing. Okay, yeah, so that's basically what I'm really interested in now. So that's one of the clear telltale signs, you know. That's one of the clear telltale signs here. And it's basically how awesome. That's one of the things I see as an awesome thing that's happening on the chart, you know. So I rather want to see price straight back into the breaker and then reverse, create a fair value gap. Then we can use that as a point of call to take trades, you know. I just want to be more accurate with the breaker, okay? Because accuracy with the breaker means an important factor in here, okay? So the breaker actually becomes that first bullish candle right in there, okay? Now back to the 5-minute time frame. I wanted to explain something right in here, you know. We could see how when Okay, so I was saying that you could see how the first red line indicated an area where when price actually got bounced off from the breaker, and then it rallied up higher. This is the first fair value gap it left, and you could see how beautiful price traded off away from that fair value gap. Okay, all right. Now the reason why I would rather want price to come back to that level is the relative equal lows hiding right in there. Okay, yeah, and that low in there on the 1 hour is more of a short-term low. Okay, so I would normally expect price to go in there and then sweep the lows. Okay. So I guess you can all hear the natural environment in my background, right? With the birds chirping and children playing somewhere and all that. So it's a kind of a nice atmosphere. So I wouldn't want to add anything in the background. Just enjoy the serene natural atmosphere in the background, okay? So I want you to just keep on hold and wait till I'll give you the telltale sign that we can execute this trade together, okay? So I think we are still on the road towards that goal. Okay. Which is me saying that I'm expecting price to actually retrace back into the 50% level, and which is ultimately also back into the breaker, and then seeking to clear the short-term low that's resting in there, and it will be a go for us. This is more like a NASA go or no go. So just like I made mention earlier that not just the first red line, if price goes below this first red line and still continues further lower into the second, it will still remain a valid trade for me. This trade will only be invalidated when price goes below this swing low right in here. Okay. So we begin to place smaller trades to see the extent of. So, for instance, if you are with a smaller account, you are placing a trade somewhere in here. This is what you got. This is what you got. Okay, with a stop of just 2 cents at $2. Okay. Okay. So basically, that is if you have a smaller account. That's one of the things you could do here. Okay. So let's look at our time frame on the 15-minute time frame. You could see that we are actually gravitating towards the how do we call it? We are gravitating towards the 50% level, okay, which is almost back into the I hope you can see how quick we are just gravitating towards the so I still want to see us come down further, you know. So the reason why I really want to see price come down either to the second level is that we have a fair value gap, a tiny fair value gap on the 15 minutes time frame resting right in here. Okay, that hasn't been tempered with, and right beneath this fair value gap is this relative equal lows, okay, which is a very good area for price to really retrace into. Okay, so that is one of the points of call for reason why we would want price to either come down to this lower level. Okay, yeah.